Hi everyone, this is your Tampa Bay Realtor Lance Mohr, and in this video I'm going to go over first-time home buyer programs. So if you're a first-time home buyer, whether you have good credit or not so good credit, whether you have a down payment or no down payment, you're going to love this video. So before I get into the 5 different programs, let me just tell you on all these programs, if there's a down payment involved, you could always get a gift from a relative for your down payment and also your closing costs. Also, with all these programs, you could ask the seller to pay part or all of your closing costs. So let's start off and talk about the first loan, which is an FHA loan. FHA stands for Federal Housing Administration. Now this loan program is insured by the government, which makes it great. They've been around since the 30s. It's a really good program, and there's some definite advantages to the FHA loan. The first is it has a low down payment of 3.5%. The second is if you don't have real good credit, FHA could be for you, because as of the time of this recording, their credit scores will go down to 580, which is incredible. Now, the downfall on an FHA loan is you have mortgage insurance that will never go away. So if you have the loan for 5 years or 10 years or 30 years, you're stuck with the mortgage insurance. So you may want to, depending on your situation, look at conventional or another loan program because of that reason. But if not, FHA is a great way to go. Now, I want to say one thing. If you don't have great credit scores, so let's say you have a 585 credit score, or you have a 620 credit score that aren't real good, and you go to a lender, and the lender says, well, we're going to charge you more of an interest rate because you have low credit scores. Go to a different lender. Remember, this loan is insured by the government, so there's no liability for the lender. So if they do say that, they're just trying to get more money out of you, because there's a lot of lenders out there that are not going to do that. So let's talk about the VA loan. VA is a loan also insured by the government. It's Veterans Administration. Now, the nice thing about VA, and in my opinion, if you are a veteran, if you do qualify for a VA loan, it's the best loan hands down. Like FHA, the interest rates tend to be a little bit more competitive than conventional, but with the VA loan, you have no down payment. You also have no mortgage insurance. You have a one-time funding fee. So if you're using your VA eligibility for the first time, your funding fee is going to be a little lower. If you use it the second time or further or more, your funding fee is going to be slightly higher. But it's a one-time fee that can be rolled into your mortgage. If you're a disabled veteran, your funding fee, and you could verify this, is pretty much going to be waived. So there's a lot of advantages to VA. It's just, in my opinion, a great loan program because you don't have a down payment. You could have the seller pay all or part of your closing costs, and the interest rate's real good. The third loan is your regular conventional loan, Fannie Mae, Freddie Mac. Now, there's a lot of variables with these. You could get into some that have 5% down payment, some that have 3% down payment. Their interest rates are slightly higher, at least at this time, than some of the government loans like the FHA and the VA, but they're a very good option. They have what's called mortgage insurance. It's really private mortgage insurance because unlike FHA, which is mortgage insurance, these are private companies, not the government who's insuring the loan in case of default. So the less of a down payment you put, the higher your mortgage insurance is going to be. The more of a down payment you put, the less the mortgage insurance is going to be. Now, when you get to around the 80% loan to value, 20% equity, you could just call the bank, talk to them about removing the mortgage insurance, which is very beneficial. So if you're going to live in the home a long time or maybe buy it and rent it out, this is a great way to go. So I would definitely look at a conventional loan. They're not going to be quite as good on the credit and some other stuff as maybe in FHA. All these different loan programs have their pros and cons. So I want to tell you right now, you need to really get a good loan officer in your area, wherever you live. If you're in the Tampa area, if you're in the Florida area, I'll put a link above to my loan officer. He works all throughout the whole Florida area. He's fantastic. So the fourth program I want to talk about is USDA. USDA is it's a program. It's from the government. Now, this is more for rural homes. So if you're in the nucleus of a city, this isn't going to work for you. If you're in more of a rural area, and you would probably be surprised what they consider rural. So it changes all the time. But what I'll do on this is I'll put a link below, and you could go to it, the USDA link, and you could check this loan program out. It's a really good program. It allows you to get into a home with 100% financing, so no down payment. So it's definitely something that you should look into if you're in a rural area. The last one I want to talk about is more bond money. Assistance for people who don't have a lot of money. And what I'm going to do, I don't have any relationship to this link. It happens to be a link that's very, very useful in our MLS. And what I'm going to do is I'll put it down below, the down payment assistance link. So there's a lot of down payment assistance programs all over the United States. Something like 86% of them have funding. And if you're a first responder, like a police person, a fire person, a paramedic, they have certain availabilities for you that they don't have for other people. Also, if you're in the military or in the education, like a school teacher, you definitely want to look into that. But what you could do is you could just go to this link, fill out the information, because they're going to want to know where you live. They're going to want to know how much money you make, how big your family is, and then what's going to do, it's going to give you all the programs that are available to you. Now, you will have to do a little legwork on your end. Again, this isn't really an affiliation with me. I just want you guys to have this so you could use it, but you'll have to go to the different banks and do a little bit of due diligence on your side, getting a hold of the different lenders on these different assistance programs and reaching out. Now, one of the things is when it comes to this type of money, whoever's lending the money, whether it's the county, whether it's the state, what they're going to do is they're going to mandate the lender that you have to use. They might have, each program might have one lender, they might have 3 lenders, and they're usually bigger companies like Regions, Bank of America, Wells Fargo, etc. So if you have a broker, they're probably not going to be working for this program right here and on this. But again, the link is below. Check it out. If you need down payment assistance, there's a lot of money out there for people. I hope this video helps you. If you have any questions, let me know. I'll do my best to answer them. But the best thing that you could do when it comes to, if you're a first-time home buyer and you want to get more information on the programs, reach out and talk to a loan officer, talk to someone who really knows what they're doing, talk to your real estate agent, and if you're looking for a realtor, I'll put a video up here on how to choose a real estate agent that really knows what they're talking about. I hope you have a wonderful day. If you like this video, do me a favor, share it and give me a thumbs up. I wish you the best of luck.